Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? Hope all is well. Hey, we're starting to invite people on our wait list. So if you've been looking to join us here at Jazz, thankfully we're about ready to get things rolling again. So on our wait list there, if you want to join or if you're thinking about joining, just sign up right there. We'll start going through and inviting people little by little. And I appreciate you guys' patience there. Hey, getting this question a lot, both from clients and I see the comments there. Can't respond to all of them, but I'm getting this thing. People say, hey, Dustin, inflation, higher, right? Should we buy some gold? Should you invest in gold with inflation higher? Well, I'll give you a general rule of thumb, and then I'm going to show you some of the data here so you understand where I'm coming from. You choose gold when you think inflation will go higher. You do not invest in gold when inflation is higher. So there's a big difference there. In other words, you're going to be late to the party, and I'm going to show that. So you invest in gold when you think inflation is going to rise. You do not invest in gold when inflation is rising or already has risen. Now, the reason for that, well, there's a couple reasons, but think about it from a really, really overly simple sort of explanation here. If your dollar, if there's inflation, and your dollar buys less, but gold is already going up, that means you have to buy more gold to then offset what you would have had to pay just before that, right? It's like anything else, right? If your dollar's losing value, but the cost of replacing your pool is going up, well, you're technically losing on that spread there, right? Whereas if your dollar is stable and the price of the pool is stable, okay, we can measure that. But if they start separating, now we've got a problem. Well, that's typically what happens. And a lot of people think, yeah, gold as a hedge against inflation. No, it's a hedge against potential inflation. So let's take a look here and see what we've got. I just picked every moment that I could, just going back to 1986 here, where inflation spiked. And I just said, oh, give me more than 2%. I got to see some sort of real increase in inflation. So in the background there, and on all these slides, actually, we're going to be showing gold in the orangish gold color, and black is going to be inflation. So here we go, 1986, gold had already started to rally before we saw inflation peak up. In fact, when inflation started to rise, gold had pretty much peaked out and started to sell off as inflation was continuing higher. So you would have had a negative net return at moments where inflation was rising because gold was actually falling. And so it make you feel kind of bad. You go, why did I just do that? I lost money to hedge against inflation, and now I have to go find something else to do with this money. All right, if we look 1997 to 2000 here, this is gold versus inflation yet again. Inflation was starting to rise and gold was already selling off. Yeah, there was one little spike up in there, but for the most part, unless you had impeccable timing, you ended up buying something that was falling as the value of your dollar was technically falling with the rate of inflation. So you get what I'm saying. Inflation higher, gold moving lower. Where's the correlation? I thought I was supposed to invest in gold when inflation was higher. Well, before inflation is higher. That's the key there. Here's a brief little look at a little moment of correlation. So we have gold rising with inflation trying to rise, although this was kind of quiet in here. It came up on my radar because from lows to highs there was an actual 2% change. But in other words, you had this little tiny moment in time, right? Otherwise, then what happened? Inflation starts pulling back a little bit, so does gold. Not worthwhile, right? Inflation peaking up over here, gold going lower just by a little bit right in there. So where do we stand here currently? Well, we know inflation's going higher, right? We're sitting around 5% right now. I mean, inflation is here, whether you like it or not. Here's about July 2020 where we set a low for inflation, very, very low inflation rate. Since then, we've perked up here to about 5%. Well, what's happened? Gold started its rally ahead of the rally in inflation. And just about perfectly, not quite, but just about perfectly, as inflation starts going up, gold is going down. So you ask yourself, do I want to use gold as a hedge against inflation, or should I look elsewhere and try to find something else to do, or just stay the course with whatever you have? So that hopefully puts that to rest. Gold as a hedge against, I think there's going to be inflation, but not gold against a hedge against current inflation, right? So there's the data, right? You can't argue with the data. That's exactly what we have. We could actually go further back and look all the way back to the 30s if you like, but well, you know, we try to make these quick videos. So I hope that helps, and if it helped you in some way or maybe kept you out of gold for a little bit, hey, give us a thumbs up. You're supposed to do that, you know, it's nice. Or subscribe. You know, we do a lot of great stuff like this. Hope you enjoy that. Well, I'll wish you a good rest of your day. We'll be back at 5 o'clock here today to do the closing beat. And yeah, thanks for watching.